The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicins Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon Eastern Time at this number, 877-927-6648. Good to be with you on this Monday, June the 24th. Wow, almost wrapped up June, huh? Well, this is going to be very interesting. Why? A little cup of tea there. Because at this particular point, you would expect that after a straight down move in the Dow since last week, what was the top? That was that the Fed announcement on Wednesday? No, couldn't have been Wednesday. Yeah, it was. So going back to the 18th and 19th, where the E-minis went to 1648.75 and 1649, a plunge down to today's low of 1556. That's 90 points. That is huge. And what we're looking at here is a candle starting to form in the 120-minute chart that says, yep, maybe there could be a bounce, but you have to treat it as a bounce from 1562, breaks 1571, says, okay, great, we can go back to the whole resistance area in the 1580s. But if there's a breakdown, if there's any rally or rally failure, you got to be real careful. So let's do this. So for my subscribers, my opening call subscribers, my daily newsletter, very intensive newsletter, gives you the Chapman Wave methodology as it unfolds every single day. Certainly for the Dow. Just looking at certain parameters, giving you all the parameters that we consider important in the different indices, and especially give a lot of interest to the, the Chapman Wave trend gauge gave a fabulous signal on Friday to say that there'll be a rug pull early on Monday morning. Whew, that was some rug pull. That has an incredible record. It's really Richard Arm's index, but I have specific parameters that I look at that are not what I believe he uses at all, and certainly not for the reasons that I use them. So it's a rather unique proprietary indicator. Now, what's very interesting about this market, let me go through the numbers. We've got plenty of time beginning of the week. Let's just get a feel for what's going on. In the weekly chart of the E-minis, it's a peak E, and the daily it was a peak E. So this says, be careful. We're looking at something here that has all the characteristics of an intermediate term signal on the weekly, saying, and if you remember when I was discussing this back in May, I said, I don't think it's going to be May. I think it's going to be June that we have a pullback. And in June, the pullback could be so sharp and so quick and so fierce that all those talking about a 4 or 5% correction, if they do buy, all of a sudden, they're going to be looking at losses. And if my reading of the market is correct, I believe that a lot of people were getting into the market, just as they did in April, May of 2011, and again in 2000 and 2012. And this one, I think, has the potential to be a little more serious. And let me go. I had questions from subscribers and users of the Chapman Wave. So let me go through a couple of things here. I'll go one by one. INDU. This is the Dow. The Dow itself has broken. It's really, let me show you here, that if you want to use a one-to-one, and actually I happen to like doing it this way, a 1 to an AB equals CD, nothing to do with the Chapman Wave methodology. This is what you hear all the time from Tom, and you hear it from Larry and Steve. And, of course, when Dave White does his work, he's always doing those measurements. The one-to-one takes you in the Dow to about 14,670. Right now it's at 14,612 with the low today of 14,551. So since it's Monday and we want to know what's going on all week, and as far as I'm concerned with my subscribers, what I had said, we're in positions that I'm very satisfied with right now. We have a one long position that we're trying to get in certain conditions because we love the stock and we think it's made an intermediate term turnaround, a longer term to intermediate term turnaround. and we've had very nice gains, and now we'd like to get it back again. But we're also short, and the shorts are working beautifully. Obviously, if you got short at the either before or right at that moment that the Fed made the decision or announced it, things are looking very good. That's really not the issue. The issue is this a time to be buying, or is it time to say, hey, if we're having more like an intermediate term sell-off, let's go through all the different parameters that we'd be looking at. In the Dow, I've got a left side, right side price time match, which says 14,430s will be the target for the Dow. And it could take a little while. We could have a pretty good bounce coming up from tomorrow, maybe this afternoon starts, or tomorrow or the next day. Counter trend bounce, I prefer if it came tomorrow on a very lousy close today and a very sharp pullback tomorrow. Now what we're looking at is going to the 9th of August. Well, 14,430, and we're at 14,612. That's a little silly. We could do that today or tomorrow. It's not a big deal. So what it's saying is that area of support is going to be really important, because there were 1, 2, 3, 4, 5, 6, 7 candles in that whole mid-14,000s, that if it takes it out, you've got nothing there as far as support goes until you go down to 13,834. So let's put this in perspective. On the Dow, we've got in the weekly chart, I'll also cover two things at once here. The question was, and I've brought this up a number of times, I'm going to do it again. I had an email from someone saying, well, how come I've got a peak C, how come you could be, how come it's not a peak D? I'm just going to read this. It's kind of blunt. It says, Basil, I emailed back to say, that's because in my methodology, I developed this technique of looking for a phantom peak where it's needed. It's a specific thing that I look for. So, and I'll explain it on the show, I said. So it says, Basil, that would be great. It is very appreciated. As I've mentioned to you in the past, to be blunt, your system saved my ass. It is the core of my toolbox, along with trend lines, fib numbers, and an occasional Gartley. Regards and a big thank you. And signs his name. Well, I respect that. I take that. Those are the questions that I love. Why? Because I've done thousands and thousands of these charts. Now, if I say thousands and thousands, I'm really not exaggerating, because if I said 10,000, it would be not exaggerating. If I said 100,000, I'd be under it by about a tenth at least. I mean, easy. You know how many charts I do. I've redone my trade station charts in black backgrounds, white backgrounds. The whole thing, umpteen times. And this goes back to more than 20 years of doing this, much more than that. So I found that there was a moment that if I did not recognize that two really close peaks were in fact going to turn out to be a peak in the end, and I typed it in, I said Chapman Wave Phantom Peak right here, Phantom Peak at, it could have either been the high of the week of the February the 1st, 14,019.78. The very next week is 14,022. 3 points away. But then the very next week you had 14,038. Hey, this is another 16 points on a weekly chart, and then it goes 56. 56 is another 16 points or so. So what are we looking at? 18 points. I counted that as a phantom peak. Why? Because if you look at the S&P, what is a phantom peak? I'll explain in a moment. If you look at the S&P going to a peak D and then an E, and yet the Dow was way behind, and if you look at the Qs, 1, 2, 3, if you look at the Qs going to a peak D, if we look at the New York Stock Exchange, and this is the weekly charts, I don't want to be behind. I don't want to be wrong. I don't want to be put into some kind of a software package that says, uh-oh, the computer says it's a peak C and there's nothing you can do about it. No, I've done this long enough to say that I can outwit the computer sometimes, and many times the computer can outwit me. But in this particular instance, my eye, a trained eye, says that with all those major weekly charts going to a peak of significance, I have to consider that the Dow Diamonds, in fact, not the root, but the Dow Diamonds were correct in saying that that could be a peak E. You put it together. If I did not have that phantom peak, I would not have been able to get a fantastic short on the Dow at the right time. And that's the reason. Over tens and tens of thousands of charts, I've come to the conclusion that that really makes a difference for me, knowing that there can be what I call the phantom peak. It is a peak that says it is going against the normal rule, but it is a sub-rule. And if you don't understand that sub-rules are extremely important in any work that you do, because if you get locked into a mindset that says, uh-oh, it can only be this. In the stock market is a fixed price point of human emotion. If the stock market is a fixed price point of human emotion, it says, as humans, you've got to extrapolate from the data that's been given enough information to be able to make adjustments. They are cognitive adjustments, they are visual adjustments, and they are, in fact, adjustments that, for me, have saved us innumerable times. So yes, that was a phantom peak. It is a false peak, but I call it a peak, and I always label it. I usually change the color. I'm working on my color schemes. You know, I spent dozens of years, more than that, on the black background charts, and I'm now using the white. And over a period of time, I'm finding I'm making the white ones as illustrative as I can. I've changed the coloring. I've even got a little black. I've got a little outline on the borders. Now, what I'll do is I'll do this quickly. I don't have the Bloomberg here, so I'll just run it down. The Dow is at this point down 209 at 14,589. I did not want us to get out of our shorts today, even though I'm suspecting that it would be a perfect time for a fabulous 3, 4, 5 day setup. I don't want it because this is an intermediate term sell signal. Therefore, I want to stay in these positions, and I'd rather add to the short side. When the tide changes, when the trend changes, you want to be able to have that flexibility to change your thinking. So Dow is at 14,590, down 209. S&P is down 27 to 1565. The Qs, now this is really interesting. Apple has finally decided that it's going to join the downside move, and it's very sharply down. Well, for Apple it is down 14 at 396. But the Qs are targeting 68.58. That's what I pointed out in my newsletter today. But that trend line. Now, here's another thing that I showed. There was an unconventional instant restart in all these techniques I'm going to be teaching again in a Master Trader series. I got so much to do. Just trying to find a date for that. I just love teaching it. I miss it so much. I want to be teaching it. I have questions about it. So that instant restart, that's what's in my latest all-day Master Trader session. We spent a lot of time on the unconventional instant restart and unconventional flat-based restart. Well, that's what it did. Gave me the peak D in the Qs. That's what you want. Let's go to the gold. The GLD is down 71 cents. Silver is down. Now, TLT, that is really important. TLT is trying desperately to try to find a bottom here. Hey, this is a very interesting perspective. I'll be back. Basil Chapman will be back with Mike in New York. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicins Hour, and my pleasure to be, as I say, Monday through Friday, 11 till noon. And don't forget, my service is the opening call. Go to the French page of TF. If ever there was a perfect time for getting the opening call, it's right now, where there's been a tidal change in the weekly chart, not the monthly. Monthly is still very positive, but in the weekly chart, and how we play this move that should take a little longer to play out and have more points, although we were real close to at least a pretty decent bounce coming up, is going to be very interesting. Let's go to Michael in New York. Hi, Michael. How are you doing?
Good. How you doing? Good morning, Basil.
Good morning.
Did you have a look at FNF? I know someone that holds a long position in that, and I wanted to get your advice on how to handle it.
Okay. Well, you know, I've done work on this before, but it was on my other, the black background system, I believe. So I don't have it here. So I just quickly did the notation. I was a little surprised because I do recall this. You might have brought it up, and we looked at it a while back, and I was saying that I do like it longer term, but it has some strange chart patterns attached to it. Now I'm looking at it, and I see exactly what those patterns are. In the weekly chart, in the daily chart, it had that right arm extension that was a spike up to 2717. Now we're looking at FNF. This is Fidelity National Financial. At 2260, down 48 cents, broken the 200-period moving average, broken the left side low bar in the daily of 2345 from the 21st of March, and looks like there are a bunch of left side troughs that it could go to. I instead want to look at it as in the weekly chart and say it had a very unusual pattern. And that pattern, I'm going to put it in right now. That pattern, I always give nicknames to my chart formations, the ones that form, they're a little unconventional. And this one I always call the double camel hump. Now what happens is, back in 2009, the Dow, 2007, the Dow made a high, I believe it was in August. And then it pulled back very sharply, and everyone thought that was it. And I said, no, there's something going on. My monthly chart is still good, and my weekly chart says that if there's another move up, I know this. It's a pattern that we see very often where there's another move up in the stochastic that very quickly turns around and comes back down. But while it's moving up, it takes the price. Now, is this notated? How can it not be notated? I hate this. Been having a lot of problems. A, B, C, D. So, all right, I won't be able to use that as an example. It's a pity because it was a very good example. So I don't want to take time to do it. Let's go back to your FNF. What happens in this particular move, there's enough internal strength to take the price a little bit higher when one, and I call it, it's really like a right arm extension because only one of the technicals is very good. Usually it's the MACD, and the stochastic kind of moves up. That's for folks, for you looking at my charts. That's this middle one. I'm looking, this whole thing right here is the weekly chart of FNF, Fidelity National Financial. And now what's happened is it had that little extension. It doesn't go ABC, but goes EFG. Why? Because the original buy signal came from, let me just put this in so everyone can see. This is the weekly chart, white background. There, put the little cap, that inverted V-shaped pattern as a cap to the top. So it goes to peak D, pulls back. Stochastic and MACD pull back sharply. And then suddenly the stochastic rises with the price, but the MACD fails. The green line fails to cross positively. It goes peak A, B, C, fails. Well, that wasn't ABC, that was EFG. When you recognize that, that is essentially saying, be really careful, because it's a pattern that says if it takes out the left side low of importance, in this case, it was the low of 23.45, made the week of the 22nd of March of this year, it could very easily go to the next level of support. Wow, that level of support was 22.73, and last week it went under it, and this week it's gone under it again for Monday to start off the week. I'm going to make a recommendation. In this particular instance, the weekly chart is the monthly chart is the one that really is guiding my my view of this. And it's been such a stellar performer that I'm really loath. It's a pity that we didn't get it maybe at 1.5 to 2 points higher to be able to. I think we spoke about that, and I said if it pulls back under a certain level, to lighten up, because there was a potential double top going back to the 28.62 level of June of 2007. You know what? I've got a break coming up. I don't want, if it was you, it was just that you want to know going short, going long, all that. But from the tone of your voice, this is a very serious situation, because if it was to pull back another 2 points or more, it's going to be a very damaging situation. Let me think about it, and I'll tell you what I recommend looking out at least a couple of weeks. I'll be back with Michael.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, folks, we're back. Basil Chapman, Tiger Technicins Hour. We've got Michael online. We're looking at FNF, Fidelity National Financial. Brian from Jackson, Mississippi, down in the background there. We'll get to him, but let's just do this. So, Michael, this is what I'm thinking here. There's a trend line in the weekly chart that says that had better be very good support, because if not, it's going to go down another 10%. And that support on the weekly chart is somewhere, it depends when it comes in, it's a declining line, somewhere between 20, I call it 20.69, and next week it'll be a little bit lower, maybe 20.65, 20.50. But that would be, to me, a sign that says this stock is going back to the 1921 200-period exponential moving average, number one. Number two, that really isn't the issue, because if it's a long-term position, while this is the most serious decline that this stock has had on a percentage basis since it pulled back from 17.43 to 14.03 back in 2011, the look of the chart pattern says that it really needs to turn around and have a pretty strong rally over 23.43 towards the 23.88 area, and very soon to be able to determine how the candles that we're looking at from last week and so far this week are starting to set a precedent in this particular stock that says whatever they're doing, they were doing it perfectly. Now they're not doing it well at all. And the big disappointment here is that there would have been an alternate count that said it was a peak C. I really have to call this peak G. If it was a peak C in the monthly chart, because it only fell from the high of 27, most recent high of 27.17 down to, say, the 25 and then held 23.85, the 9-period moving average, I say, hey, this looks really good. Time to start reloading on the buy side in the next week. This is very different. Here's my recommendation, and I think a lot of people are going to, I wanted to spend time on this because a lot of people are looking at charts of stocks that they have that look like this. I'm going to recommend that on the next bounce, you don't have to do it, but think about taking something off, because at best it needs time, and it's going to have to come back and test the 22s to the 21 area, and at worst it's going to go lower and take a lot of time before it turns around, number one. But the most important aspect here is that if this is making some kind of a hat-trick top in this particular bank stock, in a financial stock in a particular financial area, they might, for all we know, they might be holding a lot of bonds or fixed dividends, and this is really why they're pulling back. Then I don't want the person to be very heavy into this. If it rallies and does fantastic, great, so some will be taken off. But I don't want to see them stuck with this. So my recommendation is on the next rally, take a little bit off. If it doesn't actually rally, but it breaks under 21.30 or 21.50 before then, yeah, you'll be taking off just before some kind of a bounce. But that's even worse, because it's saying that there's absolutely no strength at all. So I'm recommending to lighten up. Now, in the longer term, I'm going to say if it was a longer term perspective, let's wait until Thursday or Friday and relook at the stock, because I don't want to jump into anything on a weekly chart based on the first hour or two of trading. So I'm very cautious about this because of that extra flourish in the weekly chart that took it to G, and now it's pulling back and it's got a G in the weekly, in the monthly. That's saying you've got to respect that this stock might be having a problems for a little while to come. So can I? Yes. So
I think that's good advice. That's what I would advise too. So I would.
Okay, so we're concurring, and you know what? If you're wrong, fantastic. They still got their core position. July, early August. At this point, there's a lot of weakness. I'm just the fast-moving average of the MACD has not given a signal to say get rid of everything, but it is saying, hey, respect this, lighten up. Thanks so much for calling, Michael.
Thank you very much.
Thank you. Brian Jackson. Hi, Brian. How are you?
Hey, Basil. How you doing?
Very well, thank you.
Last Thursday, the day of the Fed meeting, I got into the GLD after it dropped to near its support level. I bought in at 131.30, and the near-term support was around 130.50. Well, I've held on to it. Of course, since then, it's taken a pretty big dive, and I'm just wondering if I can maybe at least is it looking like it might get a bounce back to at least the 130 level?
Yeah, let's talk about this, because I have to tell you, I spent a lot of time over the last, not just the weekend, over the last week. And I looked at this, these patterns, they repeat often enough for me to have a lot of respect. The gap down in the GLD, which is trading at 124.15, that was the gap down on the 20th, was the gap down that said it should, in fact, gap down and then start a rally right back again to where it came from. But it was so deep, from 130.38, the low, to an immediate drop of to 123.33. 7 points. It doesn't usually do that in one foul swoop. So now this is what I'm going to recommend to you. There are two things to do. One is, when you make a mistake like that, the first loss is the best loss. I don't have to tell you that. You know it, right?
Right.
So at this particular point, what we're trying to do is salvage the position. But as you know, I've been talking about the monthly chart for a long time. I've been saying that monthly chart has me really worried, because there should be a 1-to-1 to the downside once the H pattern becomes an M pattern and gets breaks to the downside. Well, that says at 148.27 to 174.07. Let me type that in because you're not the first person to ask me about this. 147.07, 147.07. So we've got what did I say? 70. It's 174, I think. I do these numbers all the time. By the time I'm ready to type them, they're already out my head. 174.07. So what we've got is a 30-point decline. Is that right? No, 148. What am I doing here? 8 for 4 is a 4, 6, 26. 26 point. Can't be 20. Yeah, but 26-point decline. And I'm looking at this and I'm saying a 26 decline from 148.27 is 122. What have we just gone to? We've gone to 123.33. So we're in the 1-to-1 area of the 1-to-1 expansion from the H pattern in the monthly. Now comes the tricky part. Do I say to you, hey, you got in, it wasn't your plan, yet even if you had a stop, your stop would have not been as low as what it went. It would have kind of broken below your stop even. It's easy for me to say, hey, Brian, you made a mistake. Just take your loss. You can always make up a 5% or a 6% or a 7% loss. It's not hard to do. A 12 to 13% loss starts to not only sit in your head, it absolutely interferes with everything you're about to do in the market. Well, at least that's what I found. So this is the way I'm thinking of it right now. By any means, there should be the low that was made 123.33 on the 20th. That should give a decent bounce to at least the breakdown area of 126.38. So on the one hand, I have to say to you, please, 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 don't let it go. Even if it goes under 123.33 to 123.32, 1 penny, and I say to you, don't take a loss more than 1 penny below that low, and then turns around and has a 7-point move to the upside, it's the discipline that counts. And let me tell you, the moment you develop discipline in your trading in the market, that's the moment you start to see your portfolio improve. You see your psychology improve. And not only that, you tend to see things a lot more objectively because you've learned that there's a discipline that's going. That's the reason why I have stops, very tight stops and buy stops. And sometimes people even say to me, your stop was my entry point. And I say, that's great if it worked for you, but I have to have discipline. I do not like to take big losses on any percentage basis on any single stocks. I don't like to live with that. And I don't like it because I could have a new subscriber and that was their first trade and that's their worst loss, my worst loss and their worst loss. I don't want it. So I like to make it real tight. So here's what I'm going to recommend to you. The fact that you even called me about it tells me you are very concerned. You don't like it. It's not. You're not happy with that.
Yeah. Well, I was hoping the gap might get filled, but I was just hoping the gap might get filled, but go ahead.
Well, if it was going to be filled, it would have been filled Friday. And Friday normally, well, we found for a long time now gold. Tom had mentioned this a long time back, and certainly I've been following this because it's a rule that seems to have more. It's more the. It's not the exception. It's more the rule, and that is Fridays are horrible for gold, and that's what happened on Friday. That it could not rally. It wasn't horrible for gold, but it just could not get going. The GLD, and today it dipped again. Okay, here's my thinking. You survived the decline. So therefore, I have to say to you, I'm looking at other things, and other things are telling me that the GLD is ready for a bounce. I can't tell you yet whether it's just a bounce to the high of 126.38, the high of the 20th, or just a bounce on the 21st, the 125.57 level. I suspect it's ready for a bounce. But when a trend, look at that. If you're looking at my charts, look at that weekly chart. That 9-period moving average has just been an unbelievable repellent line. If you shorted it, if you shorted the GLD every time it hit that 9-period moving average, it would have been fantastic. Or if you were short and you used that as a point to get out, it would have been great. So this is what I'm thinking. For part of your position, at minimum, for part of your position, 123.32, I would have as a stop. For me, I'd probably make it a little higher because if it starts to fail today, then it's probably going to retest that low. But I'm just saying, you survived that particular move, at least for part of your position. I suspect that the other part of your position, just on what I'm looking at right now, and the fact that the dollar is real close, very close, it's within either this afternoon or tomorrow of a bit of a pullback as the euro has a little bit of a bounce, because the euro is sitting right on the 200-period moving average. I don't want to tell you at this point to get out of the GLD completely. I'd rather say split the position. Half, 123.32, you're out. But the other half, at least half, but the other half says, hey, if by this afternoon or tomorrow, the GLD gold, in fact, I'm a little behind in gold. Gold right now is trading at Q1, there we go. It's trading at, it's down 8.60, and I think I'm behind. So at 12.83. It's showing signs from the candle of Friday and the sign today. It is attempting to have some kind of rally. It's not great, but it's a rally. If that rally starts to move up, some part of your position, at least half on the GLD, must have a trading stop, even though this is a kind of a funny move, because it's the kind of move that says it could go up, but suddenly have pullbacks that hold, but are very scary on the downside. So here I am. I'm saying to you, if by Wednesday it hasn't taken out the 123.32 level, but instead has tested 125.57, doesn't sound like much, but for the GLD, any rally has just been, it just can't do it. If it's able to do it, take a trading stop. Make the stop where you're talking to me right now, 124.13, and that's the position. So you have a 1.25 point stop, and as it moves higher, don't expect to get back your money. If you do, that'll be wonderful, but expect to be raising the stop to ameliorate a bigger loss to make it a smaller loss. And just go step by step. And you can call me again tomorrow or Wednesday. We'll follow it together. But the weekly chart says, everything I'm looking at says the weekly chart, that it should not go much below the low of 123.33 this week without at least a pretty good bounce. That's the way I'm looking at gold right now. And that would say to me that the dollar is a little extended in the single leg, this move leg B, and that the dollar should be pulling back as the euro, which is sitting on support, has a bounce. And that tells me that our markets are close to some kind of a bounce as well. But I have to be very disciplined. You asked me the question, 123.32, and at least a good part of that is out. And moving up, that core position that I call the 123.32 stop, that has to have a raised base of support. So I hope that helps you, but I think your time, if you did the trade right now, I say to you, wow, now you've got a much, much better chance. So I'm not going to tell you to double down. I refuse to do that. Let's take the trade you've got and try to get out of it the best you can. If, in fact, there are positive signs at the end of the day or tomorrow, and you call me tomorrow, I might mention on my show, that might say with a completely fresh mind, there's a new trade that says you want to play just a counter trade pullback in the dollar as gold rallies. But the dollar is going higher and gold should be going lower, looking out over a period of weeks. So this is just a counter trend. I think you tried to play it as a counter trend. It just smacked you on the nose, right?
It did. And I tell you, that gap down, I think it was Friday morning, is one that really hurt. And I was in a gap down real quick back in April, and I've survived. But this one here I'm more worried about. But anyway, I'm going to take your advice, though.
Well, thank you. Okay, so we'll watch it together, but that is my advice, and I really must be very strong and adamant about it. Thanks so much for calling, Brian. Good luck with us. We'll be back, folks. The Dow is down 223, S&P's down 28.93. I want to talk about some other things. I had a call about the EEM, at least an email about the EEM. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicins Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, let's get to a couple of quick requests. EEM, that's the foreign markets, the emerging markets. What does it say? iShares, MSCI, Emerging Market Index Fund. It's very close to trying to get some support right here, trading at 36.33. But look, this is the real issue. And the question was, is it too late to get into the short position? The short position would be the EDZ. Yes, absolutely, for this particular moment. Now, what's really interesting is that EEM is trying to test the whole area of 36.57 from back in the week of the 8th of June of 2012. And it looks to me over a period of weeks it's going to go down to the 33.42 area, not such a big deal, 10% from here, and that's going to be the issue. Now the candle that we're looking at is in the monthly candle. You remember I drew this for a little while ago. I showed the apex coming in the symmetric triangle. Now look at this. It's pulling back very sharply. So it's the EM looks like if it breaks 33.42, there's a real good chance to go to the near, not on, but near the 200-period exponential moving average in the monthly chart. That's that H goes to an M pattern. You know, patterns repeat over and over. Price point of human emotion. That's what we're looking at. Now, let me just do this. I want to give a quick overview. So, answer is, yes, you can short the EM, but it has to be on a pretty good bounce. Otherwise, especially if it's 3 times, you've lost the best entry there. Now, let's just go through a couple of things. And let me check my notes here. Question. We've got the question. Good. First of all, I want to just talk about Portland, Maine. Just happened to be there. I went to the art museum. They have a fabulous Cezanne collection, well, Impressionist collection. It was all the work of Paley. You know, Paley is the guy that the fantastic Chrysler building in Manhattan that was the world's tallest building until the Empire States in the midnight suddenly stuck. Well, they first of all stuck the little steeple to make it the highest, tallest building, and then Empire State Building did the same thing with a steeple. Well, Paley, who part of CBS in the 1930s, had this incredible, and it's just a beautiful exhibition. You see the pieces that on all those art books that you studied when you were young. Those are the pictures right there. Unbelievable. I got that out the way. So that's Portland, Maine. Really pretty little city. So now I wanted to do this. Let's go through this. The reason why we went short last week, especially the day of the Fed announcement, is because there were so many signs that said to me, we have in the Chapman wave all the other charts, peak D, E, or F, and in the weekly chart I've got a phantom peak D, and that says there is every bit of evidence that the stochastic was starting to fall, the MACD was turning down, so we are pulling back, and then we should pull back in time and price. Good. So we're out almost all our longs, and this is the position we're in. And right now, we're looking at the chance that by this afternoon, maybe tomorrow, there will be a bounce. I can only call it a bounce at this particular point because the stochastic and MACD dailies are still very weak. So I'm looking at this and I'm saying, this is going to be price and time, but a big chunk of the price might have been made over the last week. I'm thinking that. I don't know yet. All right, we go one at a time. Yep, lobster rolls. I actually had one for the first time in ages. Z in the den mentioned that. So now let's look at this. If you've got the TLT declining, trying to find some kind of a base here, I suspect the bonds are just really close to some kind of a bounce, just a bounce. And if the market could turn around on a dime at any point at this particular stage, because it's getting to the oversold level, it's that VIX index that I always talk about. The volatility index is in leg C up. I'm not going to call it E for now. I'm calling it C in the weekly, but it's that weekly in the daily. That weekly chart says that there are many, many signs in the monthly that say, be careful, you could be moving higher. And if the volatility index starts to make a habit on a weekly basis of closing in the 20s, then we won't come out of this decline until we have one really sudden spike up to the 38 area in the volatility index. We've got to watch out for that. So, thanks for being here. Don't forget, we've got Larry Pesavento coming up. Fabulous show as always with Larry. Love listening to Larry, and we've got all the other shows. Stay tuned.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.